And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com I am with logicalsignals.com and also tradershelpingtraders.com. And this is the LA Wave update for the S&P 500 Index Future, the ES, for Sunday, May 9th, 2021. First, I'd like to say Happy Mother's Day to all mothers who may be checking in with us today and listening and watching this video. I hope that your day has been fabulous and that your trading week will be just as glorious as today. The S&P continues to perform basically in line with our current analysis, and that we are continuing to be in the process of finishing a minor fifth wave advance, and that in turn will be completing an intermediate third wave. And that's within the context of a much larger advance, which is a primary fifth wave, and that is still got an entire wave, an intermediate wave 4 and an intermediate wave 5 to complete the primary fifth wave, which in turn completes a much bigger picture in terms of a cycle wave 5 advance, which has been underway for quite some years, at least a decade. And we'll talk about more of that as this all unfolds. Right now, we're in the process of finishing a minor fifth wave. And we are now, as I left it on Thursday for starting trading on Friday, I said, ultimately, it would be fabulous if the S&P got above 4,211, which was the current high up until Friday, and closed above that level. That would seal the deal in terms of what I said, and would leave the S&P clear skies above to complete this minor fifth wave. And we did get that. We got that and then some. And now in Globex, it is launching yet again. And in fact, it got up to 4,232, I think, yeah, 232 on Friday morning. Then it pulled back, and now it is beginning to launch again. And the fact that it's now gotten above 42, 32, 25, it really does present that this is a pretty strong, typical third wave. Now, first resistance right here, 4,242. So 42.42. And it might overshoot it, but I'm going to think that that's likely going to complete this third wave and set the stage for yet again another fourth wave pullback. But I'm going to tell you, I'm not going to be looking for all that much. I would think that the first line of defense to support that will be right in here. And ultimately, that market cannot come back down and take that high out at 4,179.50. Cannot. But it can come down to here. Not really going to expect that much. You know, this underlying buying is pretty strong. It's been pretty strong in the Dow. It's been pretty strong in the NASDAQ. And actually, it's been pretty strong in the Russell. The one where it's lacking is the NASDAQ. So we're going to see if the NASDAQ can play a little bit of catch up here before all is said and done. Now, what are we expecting for tomorrow? Well, that would be the first is 4,042, right in there, a little bit throw over, a little bit, maybe missing it. And then a pullback. Ultimately, I have also got some Fibonacci resistance coming up. This I got to change the color on because it's just too dark. And let me go there, and let me go here, and what nice color can I put on that? That would be that one. I think I'm going to have to use this just so that I can get it up there. So you can see that the next level up is 4,302 to be exact. And that may also be an area to complete this third wave if things really start to push, but that would be a pretty nice rally. I mean, the thing is up 10, 11 bucks right now, and up to here would be 16, up to there would be over 50. Is the S&P capable of doing such a rally? Absolutely. And it's not out of the realm of possibility simply because we have now witnessed this on more times, both to the downside and to the upside. So the volatility is increasing pretty strongly. Let's keep moving up. So again, the fifth waves are normally connected to the third wave. So now let me go back out to this one to make sure that I've done my Fibonacci's correctly. I did, see, wave 2 to 3 and down to 4. And that projects up to us as to how high we can get in this fifth wave, in this minor fifth wave. So having done that, I'm going to pull it open even more. So wave 5 would be equal to wave 3 at, what did I say, 4,460.50. And I am now leaning towards that's where I would think that this will complete and turn, in fact, complete the intermediate third wave, and then we get an intermediate fourth wave correction. So we're doing 5-wave rallies, 3-wave corrections, and what we're seeing is exactly in that pattern. So the faster the market gets things done, the sooner we get into these. But it seems that we're forever looking for the completion of this and looking for another correction. But that's just the way the market moves. And so better off that we get that correction and to understand that that correction is not going to be as big as maybe the world thinks, or, oh my God, we hit the top and everybody out of the pool. It may feel that way, but I would think it's going to be sharp and it can be contained within the limitations of what a fourth wave could do. And then we'll continue to see it rally. And then as we move into the intermediate fourth wave, that one I'm expecting to be deeper and to take longer to unfold. And that's the one that will create more damage. This one is coming in between. This is a sub-minute move. I should change these colors so that we're all equal here. And I can do that just by doing that and leaving that alone and putting this so that we got all of our waves into the correct colors. And so these are the sub-minuet, these are minutes, these are the sub-minutes, and then so we still are in sub-minutes until we get, actually we're in the sub-sub. So I have my colors right because you see this is the sub-minute and this is within the minute. No, forget what I'm talking about, folks. I'm getting confused myself. These are subs and they're going to work their way out and they're going to finish a fifth and then the minor fifth. So I'm going to leave those alone. I'm expecting it to continue to run higher tomorrow, pull back in a 4, pick up the rally again. Now, whether that all happens tomorrow, well, we'll see. Again, let the market tell you. Downside, I believe, because of the strength of the rally, should be limited. Again, initially, I would be looking for a pullback. I'm not saying it finishes up here. If it goes a lot higher, then maybe that level is going to be more concrete in terms of that's where it should pull back. But we'll wait, let the market tell us. But not looking for much of a deep pullback. I'm still looking for the strength to come through to the upside for us until all is said and done, and we're into the next corrective move. So we have our upside levels. If that all just gets taken out and something breaks tomorrow and it breaks the back of the bulls and the bears come rushing in and people are screaming to get out of positions, then we have levels here. Initially, right off the bat, I'm going to say 4,200. Then I'm going to say 4,180. And as such as it starts to come off, you'll be able to put in Fibonacci. So you can run a Fibonacci from there to wherever this thing tops out to give you initials. You can run Fibonacci's from lower levels up to the high to give you next levels. But I think we're pretty well covered for tomorrow. As long as you continue to remember, we trade what is in front of us. We use the guide of Elliott and the guide of Fibonacci levels to help us plot the track that this thing is going to take. Then I use the moving averages. And right now, folks, on the hourly, there's still the 50 is above the 200, the 20 is above the 50, the 4 and the 8 are above the 20. This is still launching higher. It's not gone into similar. If you go over and you check the NASDAQ, they're kind of spaghetti. They're like intertwined with one another. and they're not as clear. If they turn and go clear, then we're going up. Play it, because the moving averages are telling you. In fact, pullbacks, if they come back to the top of that one, the 4, and if I even take this down, let's even go down to the 15 minute and see what that one looks like. Here we are again, all in alignment. I'm going to go down to the 5, might as well. All again, they're all lined up. Now I'm going to just pull this open a little bit, maybe. Come on, pull open. There we go. You can see what it's doing? That's the 4, the 8, the 4 and the 8, and they're going to control this. They're going to control it. So in other words, the pullback, if it only gets down and just bounces off of that 4, we're going up. If it breaks there, then you're going to look for this one, 42.32, if possible. And because we don't really have, Fibonacci coming in to quite a bit, to like down here. So, we've got this kind of corrective phase right there. So that'd be one area that I'd be looking. But you're looking at a break below the 50 to get it there. So continue to use. Right now, I'll move down to the 4. It's a buying opportunity until it breaks solidly. And then that's going to tell you, okay, we're going to correct further. I'm looking for a move down to 42, 33, 32, around in that area. So that's how you start to use your moving averages to guide you through your trades. Again, we're day traders, or I'm a day trader. So I depend on them to tell me where we're going and how we're going to get there. That's where I'm going to leave it for today. And the next update will be tomorrow, May 10th.